Ladies and gentlemen, welcome once again to another episode of the Think Clinical Podcast. My name is Hamza. Thank you so much for joining us, and this is going to be another very exciting episode. And then, just like I've done in different episodes, this is going to remind you very much of some common things that I really talk about on my podcast, which is especially for clinician founders or physician founders who have run their clinic for so long by themselves, and they are beginning to identify that, okay, I'm getting to a point where this is no longer just a practice, no longer just a clinic, it's a company, it's a business, right? And just making that transition, putting the infrastructure in place. And today we're going to be talking about some very hard truths, because if you're a physician founder, for instance, the question you should ask yourself is, if you left your company for the next 30 days, what happens to your business? Does it run smoothly? Maybe it won't be perfect, but is it functional without you being there? Does it begin to unravel within the first week? If you're being honest, and most physician business owners who do this exercise discover something uncomfortable. The thing most likely to break is the thing that depends on them personally, and then these are and if the most critical systems in your business require your personal involvement to function, then you have to build a business that actually functions without you. So you have to actually build a business, right? Not just build a clinic that runs. So today my aim is to be able to emphasize and walk you through some more structure, some more models, some more grounded strategies that you should be thinking about as you grow your practice. Because the trap here is that most healthcare businesses are started by people who have a deep sense of belief in something that they want. So you have a physician who probably finished school, feels very motivated to be able to help people and make a business and livelihood for themselves, so they start a clinic. And for a while that's enough, because it's a small clinic, it's growing, word of mouth referrals are bringing more patients in, you are seeing more patients, you are seeing more revenue, you're hiring more people to help you, and then you feel the need to expand the scope of your impact, and then in which case you're opening a second clinic and a third clinic. And now it becomes a financial, physical, emotional, and mental requirement of you to be able to keep this running. And so that is when it becomes a challenge, especially when you have to strategically run these practices without having to invest more physical, emotional, and mental energy into it. Now, this is what the E-Myth author, Michael Gerber, called the fatal assumption. And this is the belief that understanding the technical work of a business is sufficient to run the business. Unfortunately, it's not. So especially in healthcare, where the technical work, which is mostly clinical care, is genuinely difficult and genuinely important, the trap is particularly common. And clinicians are trained for so many years on how to master the art of clinical care. And they are trained about approximately 0 hours to be able to build operational and leadership infrastructure when they start expanding some of these dreams that they've been able to put together. So what does it look like to build an operating system, and what do you need? You need the 4 foundations that healthcare businesses will need to be able to run without you. So you have to be able to focus on these 4 foundations, and then let me walk you through the 4 operational foundations that distinguish healthcare businesses from a healthcare practice. And that is not a theory. This is very well grounded in research. This is very well grounded in data. The first foundation, which most people know but is difficult to implement, is standardized workflow. So in a practice, how things get done often is in the founder's head. So they have an answer, or they have an instinct that drives them towards making some decisions. But the institutional, or sometimes maybe you have some long-tenured staff who have been with you, they've seen the way you make decisions, they've been through the grind with you, so they understand some of this. But every process that lives in a person's head is a single point of failure. And in business, core workflows are documented, they are tested, and they are reproducible by anyone trained in that role. So patient intake, clinical documentation, billing submission, compliant handling, scheduling protocols, these should all be documented and not sitting either in the longest tenured staff's head or the founder's head. This is the first foundation. So you have to document all your workflows. The second foundation is performance visibility. We talked about this in one of our financial episodes, but it extends beyond finance. Healthcare businesses that operate with genuine leadership discipline track a small number of key performance indicators in real time, not at the end of the month, not in a quarterly board report, but weekly. Practices analyzing patient acquisition costs, treatment profitability, provider productivity, and patient experience costs through dashboard analysis identify optimization opportunities that are entirely invincible through dashboard analysis, like through manual reviews, right? So the 2025 data from leading healthcare consultants showed that the gap between high-performing and low-performing health organizations is not primarily in a clinical gap, it's a decision making gap. So the second foundation that you need to put together is a clear performance visibility. The third foundation is a delegation architecture. Delegation is not simply asking someone to do a task, it is a system for transferring authority, accountability, and decision rights in a structured way. So you have to have that architecture very well laid out for everyone. And the fourth foundation is financial fluency. Not financial expertise, just fluency. The ability to read your income statement and know immediately whether your business is healthy is very important. And the ability to understand the difference between revenue and cash flow is very important. The ability to evaluate a capital investment using basic return on investment logic, the ability to ask a CFO or accountant a hard question and know whether you are getting a straight answer is very important. I have worked with healthcare business owners who are extraordinarily competent clinicians who have been running $5 million practices for a decade without ever properly understanding their own financial statements. This is not a character flaw. This is a training trap, and it's a gap that needs to be closed immediately. So these are the four foundations that you need to pay attention to. Now, what does a mindset look like? Because they have to be able to shift their mindset too, in addition to building all these operational frameworks. Now, when you're transitioning from a practitioner who is a physician, and this is what you've done all your life, to a CEO, it's not primarily an operational change. You have to shift your mindset, and it happens in three specific decisions that every healthcare business owner eventually says. So what's the decision one? Choosing to invest in a business rather than only your clinical capacity. So many healthcare business owners reinvest all available capital into clinical expansion, new equipment, new locations, more staff, but very few investments systemically in operational infrastructure, leadership development, and technology that makes the business more operational. So you need to choose to invest in the business and rather than only in clinical capacity as a physician. That's the first mindset change. The second mindset change is building a leadership team before you desperately need one. You have to be able to identify that as you grow, you need to start putting a leadership team together that will keep you together and help you when you start hitting the 10 million, the 20 billion. And that is going to be important. The third decision is protecting your highest leverage time. Research on high-performing CEOs constantly shows that the leaders who build the most resilient organizations are those who protect blocks of time for strategic work. You are thinking, you are planning, relationship building, and learning against the relentless pressure of operational involvement. This is very, very, very important. The last thing I always leave you with is a 30-day audit, and you have to look at this. Let me bring you back to the thought experiment I started with. Your business for 30 days without you. I want to give you a practical way to use that exercise. Take your last week and write down every decision you made that someone else should have been able to make. Every piece of information that came to you because there was no system for it to go anywhere else. And every problem that was escalated to you because there was no identified process for resolving it. This is going to be your 30-day audit and 30-day reflection back. Every item on that list represents either a missing process, a missing person, or a missing technology. And every time every item represents time you spent in the operational layer of your business instead of the strategic layer. You have to always, as a CEO, stay in the strategic layer. And the goal is not to remove yourself from the business. The goal is to build a business that gives you the choice to remove yourself if you want to. I will be going through more related topics like this as I move on, but I want you to really take the time to reflect on this content, reflect on what it's telling you, reflect on what your business is telling you, and make the right decision. So this has been another episode of the Think Clinical Podcast. Once again, thank you so much, and we will see you in our next episode.